Mr. Mark Selby, how are we doing this week?
Very good, Mr. Matthew Gordon.
I'm glad to hear it. Okay, so we are going to talk nickel as usual. We'll talk a bit of company news at the end, but I wouldn't mind if you're going to run through. Just let's start with pricing, and then we'll kind of get into the main players affecting that.
Sure. So nickel's continuing to retrace. Again, we had a pretty sharp move after Chinese New Year, where again I was expecting to move higher, but wasn't expecting to leap more than 15% out of the gate. So we've retraced another, $500,000 over the past week. We're still off, again, $1,000 off the bottom, and giving up about 2/3 of that overall gain. Again, this is typical normal behavior. You don't move up in a straight line. You make one move higher, retrace, consolidate, and build a base again. So, I think we'll see that we'll trade in the 16,500, 17,500 for the next while. The big driver of that, we're really seeing we're not seeing sort of broad based support yet in the market. As expected, the big restocking that we wanted to see post Chinese New Year continues to emerge. I think this might be the 5th or 6th week in a row where we've seen nickel sulfate prices move up another 3%. This week, nickel sulfate's actually trading at a pretty substantial premium for the first time, in quite a long time. What we talked about, 12, 18 months ago is that we're going to start to see this great convergence emerge where, we'd seen massive discounts, to the nickel price for a lot of intermediate products because we couldn't get all the right products to the right market yet. We was going to be short term. And again, by the middle part towards the end of this year, we should be largely complete. And that is definitely happening. So again, sulfate trading at a big premium, that big premium won't stay there. It will come back a bit. But, what we've seen so far is MHP and nickel matte, which were down MHP was down in the 60% payabilities, now back up, into the low 80s, matte's in the mid 80s. And it'll be interesting to see this week with the pull off in prices, whether that ticks up another leg higher. But, what we should see by the second half of this year is both those numbers, up into the 90th percent range. So that's the battery side, which has been great. On the other side, the stainless market has been really sloppy. It ended the year quite strongly. I think maybe people had greater expectations for what was coming down the pipe. And I think there was a little nervousness around Indonesian ore quotas. The government was slow getting those out. They have ramped it up. They still have only given out about 150 out of about 109 versus 190 million tons of ore quotas they had last year. So there's still some room to go. But I think the short-term panic around, having enough access to ore, has subsided. Again, for those people, who are looking for physical signs that the market isn't as tight, when people were panicking about, nervous about supply, that generally means there's not a lot of material lying around. So, that was good confirmation of what was physically happening in the market. NPI discounts actually, despite the fact the market's sloppy, we're seeing stainless inventories build, seeing stainless prices come off a little bit. NPI discounts actually contracted a little bit. So we'll need to see matte get up to the 90% range before you'll start to see a shift in the NPI discounts coming. So we're still a few months away from that. But again, this, sort of whole great convergence that I expected a couple of years ago is really playing out pretty nicely. And again, we really won't see a move back up to another leg in the market until we really see consistent growth in both the stainless and the battery markets going forward.
Right, and if I look at sort of the comments that come into us, it's quite clear that most people kind of base their assessment of what nickel's going to do this year based on the commentary around EVs, right? But stainless is the bigger by some distance of the two markets. Yeah. When you say things like Indonesia's only approved over 153 million tons out of a possible 190, well, compared to 190 plus last year.
Yeah.
What does that mean in real terms for the market in terms of perception around, I say, well, maybe there's going to be a shortage, or the ability for Indonesia to kind of flood the market, which is a big part of the commentary that comes back to us.
Yeah, so I would say a couple of things. One is, the government is managing ore supply. That's made it very clear that it is going to, because they cracked down, quote, on illegal mining last September. So, it's clear they're using this mechanism to manage supply into the market. The thing we don't know yet is, with 190 million last year, we need at least, close to 10 to 15% increase in ore supply. So we need that number to get up to 210 to 220 million tons of material at a minimum. And so, yes, they've approved enough quotas to take away any short-term panic, but 150 versus 210, that's still only 2/3 of what we're going to need this year. So I think, what will be interesting to see, and what I expect is, they will, if prices start to move up, they'll be talking about, moving up dramatically. And I'm saying again, that would need to be north of 21, 22,000, which I don't expect to see until later this year. They would start to say about, approving more quotas. If prices stay down at this 16,000, 16,500 level, again, I think you'll see some, quote, more slowdown in ore export quotas being awarded, which will provide some near-term support to the market going forward.
Right. And just on this pricing, you talk about 3 steps forward, 2 steps back, but the general trend is up. I mean, how much of that's going to be driven by Indonesia, and what do you attribute to the OEMs, the car manufacturing market's ability to affect pricing around greener premium nickel, which we've talked about in the past? You've got your own initiative, net zero, for instance.
Yeah.
How do companies like you play this?
Oh, for us, right now there's already, there's been quite a bit of chatter over the last month around green premiums. Andrew Forrest was banging on the table that we need to have this happen now. From our perspective in North America, there's already a premium for nickel products, for stainless steel products. Whether that's because it's local, clean, or green, or IRA compliant, you can't really isolate one of those variables, but there's already been a sustained premium in place for quite a while. As we move forward, as demand for nickel increases in North America for the first time in many decades in a meaningful way, and, again, other than projects like ours, very little new supply, we expect that premium to start to widen out as we go forward. We haven't included any of that in our feasibility study, but those of us, who are lucky, and there's a handful of us who have projects in North America, should benefit from that. One thing I disagree with is, you can't force a market exchange price before the market wants it. In order to have a proper, effective market exchange price, you need both demand for that product. Are consumers going to actively trade that contract, and then our supplier is actually going to provide physical material to support the underlying contracts. In that space. I would say neither of those is really there. So despite people wanting to have some sort of green benchmark price, until the market is ready, it's not going to show up. Now, that being said, could I see something like that happen in 3 or 4 years? Most definitely. And again, usually what happens with these things is you'll see somebody like Fast Markets basically have a non-exchange traded price that gets quoted weekly or daily. And so, giving some market transparency on that. And then once that's been in place for a while, and there's enough people who set their pricing off of that benchmark, then you'll see an LME contract, LME type contract emerge. So, I would say we're probably 5 years at the best, from an LME type contract emerging on that space, and then probably at 2 to 3 years away from a benchmark price emerging on that basis.
Right. So I think everyone's going to very much focused in on Indonesia and creating, the OPEC of nickel, and the control or potential flooding of the market. What about these kind of microeconomic environments? Like, we're saying, OEMs in the West talk about, maybe premium nickel at some point down the line, as you say. But what are countries, what are provinces doing to help and enable? So there's premium pricing at one point, and there's, I guess, tax incentives and the like elsewhere. Are you seeing countries, provinces, states stepping up in the West. I'd like to drag in Europe in here as well, to allow companies to kind of move through the phases. Because I think one of the big discussions of the moment is people's sort of dawning realization that sometimes these mines take, 10, 15, 20 years to get into production, and we're kind of heading towards this cliff edge. And I'm wondering where the help's coming from to either speed up the process by removing a lot of the red tape, or financial encouragement somehow. I mean, what are you seeing? What are you hearing out there?
Yeah, no, I mean, we're extremely fortunate in Canada. One of the sort of key takeaways from the last PDAC in Toronto, just about a month ago, was just the amount of government presence. I got to meet with multiple federal ministers, got to meet with the provincial premier and a bunch of other senior ministers during that time frame. And to be honest, 5 years ago, you might get the natural resources minister and maybe the prime minister stop in for literally like 30 minutes. The natural resources minister sort of stop by, drive by hour or two, and that was it. Good luck, miners. See you next year. And they were literally around all week long. So that's the part that is not going away, despite whatever little market noises are happening in terms of nickel or lithium prices being higher or lower than they were a year or two ago. They want to get China out of the supply chain. They need to get China out of the supply chain. And so, all of the, various incentive programs that have been announced, again, you will start to see that money flow through the second half of this year. And then I think that's when people will step into the market and see, oh, geez, okay, this guy, it's not just talk. The money is coming, and we do expect those financial commitments to start showing up this year. And then on the red tape side, we're quite fortunate where we are, specifically in Timmins and in the province of Ontario, that the permitting regime is relatively straightforward. We've done it before, and we're more than halfway through that process. But even with that, you've got the, Canadian federal government, in terms of current political spectrum globally, they're, pretty left of center. And you wouldn't expect them to be the one saying, oh, we need to speed up mine permitting, and we're going to find ways to get that down from, where it had been, to make it even faster for companies to get their permits. But those are the kind of conversations that are happening. And, again, we can tell you with our engagement with the federal environmental agency, far more constructive, than they were 10 years ago when we permitted another project, at that point in time. So, they are making changes to make it happen, and they want projects like ours to supplant supply from China. And so, it's just a matter of time. And again, I think once the checks start flowing later this year from government, people will go, oh, okay, they actually are going to follow through. And again, it's ridiculous. We're trading at a fraction of the free money that's coming from the government for our project. That's, bottom line.
Okay. Well, let's talk about some of the other companies out there, like Talon Metals, who they're often on the show. They put out another nice hole. Yeah.
So, unfortunately, not a lot of company news this week. Again, whether China, was designing this in terms of, helping, create a big overhang on the nickel market 6 to 9 months ago. Because again, if you can start with capital, it means that projects are going to slow down in terms of, advancing and competing against them. But, if that was the case, that, we are now seeing that impact. So, this week, just a couple bits. Talon, nice hole. Anytime you can pull out something that's got 6% nickel and just under 3% copper, they're sort of looking to infill and extend the resources that they've got for some of the things. So this is about 10, hanging out about 10 meters off the existing resource. So, that was great to see. They said they had 4 rigs going right now. So, hopefully we'll start to see a whole slew of drill results as we move through the spring and summer. And, again, Talon's one of the few projects, that can come online in the nearer term and be able to deliver market into North America. At the other end of the spectrum, sort of the last spillover from the capitulation announcements in January and February. BHP, who said they were, had written down some of their nickel business and reviewing some of their assets. Not surprising, the West Musgrave project, they announced that they cut the contractor workforce by about 25%. So not stopping the project, but just slowing the spend. That's typically what you'll see with some of these bigger projects is they just, slow their capital spend on it. Again, in terms of, BHP's quote timing on the nickel market. So the ironic thing, and I mentioned this, back when this acquisition first happened, but they picked this asset up from Oz Minerals, and the read-through value based on whatever analyst numbers you looked at was close to $2 billion. And this is for an asset that they sold in 2014 for $250,000 cash, a royalty, and a $10 million payment on construction. So they owned it. Actually, BHP predecessor company discovered it. The company that bought it did put some money in, maybe, I don't know, probably 30, 40, $50 million, maybe max. But, BHP, jumped right back on it at a recent peak in the nickel market. And so, we'll see how they go. But just again, BHP's track record in calling the nickel market's been pretty poor. So the fact that they're slowing this down is a good sign that maybe the nickel market will come back sooner than later.
There we go. There's the news. Mark. We'll see you next week.
Sounds good, sir. Take care.